Hello everyone, today is June 20th, 2013. The day before the longest day of the year. I started my day off by receiving an email from a longtime family friend, known me my whole life, my father's age. And he likes to keep me on my toes as far as the economy goes. He's done quite well for himself financially and has seen a lot more than I. But he sent me this article. He likes to keep me grounded, if you want to say, when it comes to what's happening with the metals. So the article was gold prices collapse. As everyone remembers, it's just a yellow metal. One of the most common pieces of investment advice in recent years was you got to have some gold. Gold's going to keep going up, and you got to have some as an inflation hedge. And it's the only true currency, even though it's not a currency, it's real money. Gold would protect you from all the out of control government money printing and this and that, and the list goes on in the article, and they actually had a little bit on Yahoo talking about it. That gold's no one else's liability. Well, the party's over, and there's no fundamentals for gold, so, if they had fundamentals, then a drop like this really wouldn't mean much, but since it has no fundamental value, then this drop could lead to $600 an ounce gold. Well, bring it on. Bring it on. Bring on $5 silver. Bring on $400 gold. Bring on $2 an ounce silver. Man, I would definitely sell the blazer then. I know where this is all heading. Most of you know where this is all heading. Bring on the lower prices. I don't care. I'm not a trader. I'm not, a lot of people are saying, well, if you listen to Moneybag 73 or a lot of these other guys, you're getting slammed right now. If you got into the metals at $35 an ounce, you're getting hammered. You're not getting hammered. You get the same amount of ounces as you had yesterday. You can't look at this in the paper price. You have to look at it in the number of ounces. So whatever, I say bring it on. Bring on the lower metal prices, and I'm just going to load up because I understand what's happening. This all started because Bernanke hinted at slowing down the QE reduction. He's doing QE to infinity right now. Well, it may not be infinity. Next year he may taper it or stop it. He said that inflation expectations was only 1% now. It used to be 1.5%. So there's really no inflation. Although if you look at food and energy, medical costs, you look at anything that affects the average person, you see inflation everywhere. You see, higher prices. Let's not confuse inflation being expansion of the money supply, which the monetary base certainly expanding. I want to show you a few graphs before this is over with. I'll have exhibit 1, 2, and 3. I want to run through real quick. But I just wanted to say that, he hints at the QE slowing down, and this fake economy, for what it is exposed. I think that this might have just been a precursor to more QE. This whole thing with the talking about, tapering back might just be a setup so that he could actually ramp it up, because you got interest rates, the 10-year note I saw at 2.45. It was at 1.6 a couple months ago. Interest rates are heading back up, and the low interest rates was fueled this whole housing boom we've been having. That's not just going to continue on forever if rates go up, so he's got to continue to force the rates down to keep this housing market. So, he may have used the words that he used and to give himself excuse to ramp it up. It was a bloodbath around the world. You look at what happened. Copper was down, oil was down. Things were down more in one day and in 2 days than they had been in the last 19 months. you know, the spread on interest rates, you know, largest change in like a year and a half, 1 day and 2 day gold changes and silver changes and just everything. You know, it's totally mad dash for cash. You had all these traders, institutional buyers just ditching commodities, equities, and they were just jumping in to the king dollar. If you want to go ahead and jump on ship with Krugman and Larry Kudlow about king dollar and cash is king and all that stuff, go ahead, go right ahead. You know, I guess I'll have to leave this with a little common sense from Ron Paul. Before I do that, let me show you Exhibit 1, 2, and 3. We got to really look what's going on. Exhibit 1, right here, okay? $800 billion monetary base before the '08 collapse. We're at 3.45 now. We're headed to $4 trillion base money. Now, the recession's that gray line there. That ended in 2009. Well, if the recession's over, why are you doubling the monetary base again? So Exhibit 2 here is the velocity of money. And this is why we don't see the inflation, higher prices. I've been trained and, you know, I've brainwashed to thinking that inflation is higher prices. It's not, okay? I still make that mistake over and over again. The inflation was right there in Exhibit 1. You saw it. They inflated the monetary base. So higher prices aren't here, which everyone was afraid of, and we're hedging with gold and silver because the velocity of money is at all-time lows in the last 60 years. You know, the turnover of a dollar is just not happening. Well, it's going to happen. It's just not happening now. And so they can continue to print up money and keep this whole phony economy afloat because of Exhibit 3, which is right here. The reserves that the banks are holding with the Federal Reserve were almost nothing, and then they started paying interest on the reserves, encouraging the banks to hold money with the Fed, and you can see that it's $2 trillion being held at the Fed. And so the money that they're buying the securities from, the mortgage-backed securities from the banks, the bank is putting the money back with the Fed. So here you see that a lot of the money that's been created out of thin air is being held with the Fed. Now, I want to ask you, I don't know, I mean, can this just continue to go on? Can they continue to print money and have the banks hold it at the Fed? Can the banks hold another couple trillion at the Fed? I don't know. I don't think so. This could be the unwinding that we've all been waiting for, the big economic collapse. I don't think so. I think the Fed can still continue to print money. Most people don't understand what's happening, and the people who do understand what's happening, they're holding real money. They're holding real money. They're going to continue to accumulate real money in this, what could be the best trade in hundreds of years of holding real money as this whole global 46, I don't even know, it's like 46 trillion or something global debt. It's outrageous, and we got a quadrillion dollar derivative market. I mean, the whole thing's insane. We're in uncharted waters. I don't think Ben Bernanke's got all the answers, and I think people are losing confidence. So we'll have to see what happens tomorrow, everybody. I'll talk to you all soon.
But no, I think if you look at the record, of the value of the dollar since the Fed's been in existence, we have about a 2-cent dollar, and gold used to be $20 an ounce. So I would say the record is rather clear on the side of commodity money, and history's on our side. Like 6,000 years of history shows that it maintains value, and paper always self-destructs. I would say that long term, as long as we have excessive spending and excessive computerized money, you're going to see gold go up, and eventually, if we're not careful, it go to infinity because the dollar could collapse totally.